Now we're going to move on to Mike's question. Mike E, he says, what strategies are typically not allowed in IRA accounts? I wish I had my little slides here from the bull put presentation, the early stages of our bull put presentation, which is coming out soon, but I don't have that available right now. It all depends, Mike, I'm sorry, it all depends on the broker itself, what they allow. I remember in the old days, if you had an IRA at Options Express, they might start you off with level 2 trading, which at the time would allow you to do covered calls, buy calls, and buy puts. And I remember if I remember correctly with Options Express, they would allow you to apply for level 3 trading, which would allow you to do some credit spreads, some diagonal spreads. I think cash secured naked puts might have been on number 2 as well. Off the top of my head, I don't remember if that was their structure. For me personally, Mike, sorry about that, folks. I was on the wrong account and just realized it. For me personally, Mike, I have an IRA account over at Fidelity right now. And originally, it was just level 1 trading, which just allowed me to do covered call positions. And I applied to trade for level 2 trading, I'd say 6 months after I started opening a couple covered calls. You know why? I really wanted to be able to buy the puts, of course, to do married puts in that portfolio more than covered call positions. And so I was approved for level 2 trading, which now allowed me to do covered calls on level 1, buy calls and buy puts on level 2. Let's just go to the custom spread tool here. And we'll use DAR, for example. And okay, we'll do that. No, sorry, folks. Okay. So I'm just entering a covered call. So typically in an IRA, you get level 1 to start if you apply to trade options. I was approved right away. I know some people might not be with an older brokerage house, like maybe Fidelity. If you open an account at Fidelity and apply to trade options, they might want you to do a few stock trades first before you get to level 1, but usually it's pretty quick. You've heard a lot of things now. They're not IRAs, but a lot of cash accounts at the Interactive Brokers, Thinkorswim. Trade King, I don't think is anymore. I don't remember. E-Trade even. They might put you at level 2 right away if you apply to trade options. I'm not sure, but they're a little bit more lenient with that as well. So level 1, is typically just covered calls. Level 2 in an IRA, remember this is for an IRA. Level 2, they'll usually allow you to apply for, and that allows you to buy calls and puts. Now you look at it and you say, okay, so I'm allowed to buy calls and puts, but that's only 3 strategies. Well, the trick is that this opens up another 6 or 7 strategies, believe it or not. So if I can do covered calls and I can buy calls and buy puts, and of course I can buy stock already, Mike, this means that once I apply to level 2 and get it, oh yeah, and cash secured naked puts might be here too. I should say cash secured puts, not naked puts, but cash secured puts without the margin should be allowed on level 2 as well, if I'm not mistaken. Okay, so you're applied for level 2, you get it. What does this now do? This now means that you can trade married puts and almost all of the income methods that are discussed in the blueprint just on level 2 trading. Even the riskless spreads, income method number 6, income method number 6, I believe even income method number 11 can be done, and income method number 5 can be done in the proper structure if you're only on level 2. So what is that? That's just buying stock and buying a put. I might do them separate, but I'm still in a married put position as well. Now, so we've got covered calls, married puts, which also opens up collars. I can buy stock, sell a call, and buy a put, maybe an out-of-the-money put for 30 days out. So now I can do standard collars or any form of collar as well. Of course, we can buy calls now and buy puts. Okay, so now we're up to technically 5 strategies we could do, including covered calls, married puts, collars, buy calls, buy puts, That looks like a B, sorry. Buy puts. And then we can also do, since you can just buy a call and buy a put, you can do long strangles or long straddles, buying a call and put at the same expiration for an earnings play at the same time. So if you include just stock, that'd be 1, 2 for covered calls, 3, 4 for buy calls and buy puts. Now collars, 5, married puts, 6, 7, 8, long straddles and strangles as well. Now, in this particular IRA, I am not allowed to go up to level 3 trading. I cannot do the credit spreads I mentioned in my IRA account at Fidelity. That's done in a cash account at a different brokerage house because of the margin requirement. So if your broker does not allow you to go beyond level 2 with the IRA account, this is what you're allowed to do. The 8 strategies mentioned here: buy stock, covered calls, buy calls, buy puts, collars, married puts, long straddles, long strangles. 8 different positions, and you can do almost everything in the blueprint as well. Even though we talk about some of the riskless spread positions, income method number 6 is doing a bear call credit spread inside of the married put position, right? But in the proper structure, your broker does not see it that way. Let's take this position here. Original cost base is around 62.85, let's say. And what can I do now in level 2? I can buy, oh, it's not April, I'm sorry. I can buy stock and I can buy a put. And let's say we bought that for $6, okay? So let's say a few weeks ago, I bought the stock at 62.85. I bought a July 65 put for $6. I'm in a married put position, exactly as I would structure based on the radioactive trade. This, of course, also means that I can sell a call. I can sell the 70 call, maybe for $1.30 or $1.40 to help me with that controlled risk of 385. So let's go ahead and sell that. This is a collar, right? I have 3 working legs on the position. I have a short call, long far out term put. This is radioactive trade. That's how I'd structure radioactive trade, and the stock position. So my broker essentially sees this as a collar. Really, they might just look at it as a covered call with an extra long put. Okay. Now, one of the income methods we use in the blueprint, and you can use on just your stock positions if you're worried about your covered calls getting assigned and having a capped gain in that position, there's a way to leave the upside open, and that's by maybe selling the 70 call and for the same month buying a 75. What is that structure right there? It's what Dennis was talking about in the first form of the presentation. It's a bear call credit spread where I'm selling the 70 call and buying the 75, so I'm not in a naked call position now. I just have a 5-point spread, and I'm getting a net credit. But how can I do a bear call credit spread in my married put portfolio in my IRA account, which I've done at Fidelity, if I'm not allowed to trade spreads? And the answer is because when you do it, your broker doesn't see this as a spread. I'm not entering it as a spread. I'm entering it as a covered call and then buying an extra long call as well. The advantage here is that it leaves the upside open. So if DAR has another surprise run, as it did a couple months ago, and it goes up to 75 or 80, I don't have the capped gain as I did with that collar or with just the covered call position, excuse me. I take away a third of the premium. So instead of getting $1.35, I'm only getting about $1, but that's the benefit to have the upside open. I've still lowered my risk from the initial at-risk amount, and I can do this in my IRA because all it looks like is a married put with a covered call or a collar, and I just bought an extra long call at a higher price as well. Okay, Mike, so if you get if you apply, Mike, and get approved to be level 2 in your IRA, that should open up 8 different strategies for you, and even the preferred married put structure that we prefer to use with a larger portion of our accounts for stability and protection as well. All right. So I hope that answers your question, Mike. And again, I mentioned that each individual broker is subtly different. Some may allow you to do diagonal call spreads, perhaps poor man's covered calls with a version of level 3 in an IRA. Some don't. As I mentioned in Fidelity, I'm capped out at level 2. I use my other cash account to do diagonal call spreads, calendar spreads, as I mentioned, the bull put credit spreads, and some other maybe positions as well.